The US Federal Reserve still plans to cut rates this year, the chair reiterating this morning that the bank has time to deliberate over its first cut given recent economic data. So, this just in from Jay Powell.
On inflation, it is too soon to say whether the recent readings represent more than just a bump. We do not expect that it will be appropriate to lower our policy rate until we have greater confidence that inflation is moving sustainably down toward 2%.
All righty, let's bring in the independent analyst, Evan Lucas. Evan, what do you make of these comments and what does it mean for us?
Yeah, so his comments actually even went a little bit further than that still, in that he highlighted that the recent data does not break away from their current trend, and their current trend is still for 3 rate cuts in 2024. And with that in mind, they have to realistically start in June to get through the amount of meetings they have left for the rest of the year, and also, as he just alluded to in the piece that you put out there, make sure that everything is on a sustainable path. So the market last night woke up to that and basically said that they've probably got a little bit ahead of themselves with moving back expectations. They've reiterated to the idea that June is now the liftoff date. What it means for us, though, is that we're probably going to be the last, because they weren't the only data that we saw last night from around the world that really highlights that the interest rate cutting environment is here to come. The ECB is probably the one that's going to start next. The European Central Bank is due to meet in May. And last night, their inflation data for the Eurozone was significantly lower than expected at 2.4%. And they have what's equivalent to our cash rate sitting at 4.5%. So it's even higher than we have. And everything that Christine Lagarde has been saying over the last 3 to 4 months is that they will start rate cuts. And it now looks like they're going to be the first, after we've seen from the Swiss National Bank. They'll be next, along with the Federal Reserve, which means that we will probably be the last off the rank because we have gone slower and much more conservatively than our overseas peers.
And then when you look at the house data, I mean, that CoreLogic house data was fascinating this week, wasn't it, Evan? I mean, 14, 15 straight months of house price rises, despite those interest rate not being cut anyway. So does this mean that you think, and I know a lot of economists think this as well, that maybe our first cut might not be coming until next year now?
No, I'm still of the view that they will cut this year, purely for the fact that, again, their assumptions have not changed, and their assumptions are based on their forecasts. So if you take their assumptions, they expect to cut rates twice in 2024 to make their forecast that unemployment will fall to about 4.5%, rise. You'll see inflation start to go down to about 3.2%, and that the GDP figure will be about 1.2, 1.4%. So I'm still of that camp. What the data, and you alluded to in the housing data, is it wasn't just what we saw from CoreLogic on Monday. Yesterday, PropTrack showed that since COVID to now, the increase in house prices has been as much as 40% on an accumulative basis. And that is what is also now starting to come from the point of view that we know demand, in their view, as they say, is going at a brisk pace. And it's more than that too. It's the fact that migration now is absolutely driving it. Plus, COVID's the other part of it. We now want to live with less people. So for the first time in 26 years, the average house people per house is below 2.5. It's sitting at 2.44 people per house. And that means that drop has added an extra 120,000 houses needed just to offset that, let alone the migration. So the RBA has this big issue that demand has changed through demographics, not necessarily just through what's going on in market pressure. The demographics is therefore driving up demand, supply is falling, and that's why we have a house price market that is completely out of kilter with 13 rate rises.
Yep, true. Evan, good to chat as always. Thank you.